Club members everywhere. Jeremy Lutz here with your midday market update for Friday, the 7th of December. And already an end to the first week of December. Today, the U.S. added more jobs in November, sending stock indexes futures, actually the stock index futures, up in pre-market trading immediately after the report was released this morning. The main numbers from the job report were encouraging, but the underlying report was mixed. The Labor Department said that the U.S. added 146,000 jobs last month, and the employment rate fell 7.7% from 7.9%, the lowest since December 2008. The employment rate fell largely because discouraged unemployed workers stopped looking for work and weren't counted among the unemployed. Also, the Labor Department revised previously released job numbers downward, saying that employers added 49,000 fewer jobs in October and September than initially estimated. However, missing from this report was the effect that Hurricane Sandy has had on the job market in the Northeast, and all estimates say that likely we won't see that included in the jobs report until sometime, probably the February report. Another cloud hanging over the market is notably the fiscal cliff drama in Washington today. Congress and the White House are trying to hammer out an agreement on the government spending and tax rates before January 1st. As many of you know, if they don't, the government spending cuts and higher taxes will kick in effective that day. It doesn't help that House Speaker John Boehner said today that there has been no progress in negotiations to avert the fiscal cliff and called on President Barack Obama to produce a new offer to them to kind of negotiate with and go over. And with that, let's see what the trade triangles are saying about the market today, and we'll start with the Dow. And you saw futures this morning, it was up about 52, 53 points. I saw at one point. Came in on the opened at 13,072.87. Currently up right around 44, 45 points. I've seen it dip down a little bit below that, but Dow's producing strong. Issued a daily trade triangle today at 13,089.11. Sending the score to a plus 70. Currently, long-term traders are sidelines this market. Intermediate-term traders are sideline, and short-term traders are long based on that green trade triangle today. Moving along to the Nasdaq is as Apple goes, they say the Nasdaq goes, and we'll take a look at Apple in a minute. But today, it has been down. It started just a little tick over when they opened the markets today. However, it's gone down, and now it's down 18.54, currently trading at 2,970.55. Intermediate and long-term traders are short this market. Short-term traders on the sidelines based on a green daily trade triangle back 3 or 4 days ago. The current score is negative 65, which indicates that it is currently in a trading range. Moving along to the S&P 500. Again, kind of opened the day just a couple ticks up. It retreated back to negative and has kind of gone back flat to where it opened the day. Currently down 0.01%. Currently trading at 1,413.72. Issued a 3-day high on a daily trade triangle today on pretty much at a little bit after the open of 1413.95. We issued it at 1415.56. Of course, that pushed the score to plus 70, which still indicates it's in a trading range. Intermediate and long-term traders are on the sidelines based on the monthly and weekly trade triangle. Short-term traders could use the signal today to go long if you're looking to maybe go into a long position towards the end of the day or into next week. Moving along to the EURUSD. Euro, Adam had talked about a couple days how in the world was this moving up above the 13 or 1.30 level, and looks like we have a bit of correction here. Exited a long trade for short-term traders at 1.302, heading down south, currently trading at 1.293 right now, score of a plus 85 with that red issuance. So long-term, intermediate-term traders are still long this position based on green monthly and weekly trade triangles. However, short-term traders are on the sidelines based on that red daily trade triangle from yesterday. Moving along to gold. Gold's still in a negative 60. Intermediate and long-term traders are on the sideline. Short-term traders, however, could have got short at the 1705 level right here based on our weekly trade triangle on the 4th. Currently trading 1700s. Had a big move down today to a low of 1685 in early morning actions, but kind of moved back to around where it opened up, currently trading at about the 1700 level. Look for depending on news coming on the fiscal cliff and some other things going on, gold could be off to the rise, but currently we're sitting in sidelines positions unless you're a short-term trader. Silver's kind of flattened out a little bit the last few days, currently trading at $32.95, still at a plus 55 here in a trading range. However, long-term and intermediate-term traders are still long this position based on the green monthly and weekly trade triangles. Short-term traders are on the sideline based on the red daily trade triangle at 33.18 4 days ago. Moving along to copper. Copper continues to climb. It looks like it's still a plus 100. All time frames are long across the board based on our last daily trade triangle at $3.53 on 11/29. Currently trading at 365. Volume is a little light on it seems, but it is moving along here. And crude oil, we'll take a look at crude oil. Crude oil is continually bouncing across this kind of flat plane here, and we'll just kind of draw a quick trend line in here. You can kind of see it's really, for the last few weeks, it's just been kind of flat. It really hasn't been a whole lot of action going on here. Currently at negative 65, that is a trading range. Long-term traders and intermediate-term traders are on sidelines based on these a red monthly and a green weekly. And short-term traders are on a sideline as well based on this red daily with the green weekly. There's a red daily to get out of a long position on the short time frame. And we'll finally wrap it up real quick today, kind of ending the weekend on a quiet note, is Apple. Apple has really kind of taken a hit over the last month or so, month and a half. As you can see today, it kind of had opened up at 553 and has really just gone down there from the currently down $15.60 or 2.85%. Currently trading at 531.84. Long-term traders are still short this market. If you're trading just the long-term, intermediate-term traders are in a sidelines position, and short-term members are in a sideline positions as well based on this red daily exit here at 582.68. But overall, things aren't looking good for Apple. You really got to wonder where they're going next. A lot of rumors that talking about building computers in the U.S. next year, so we'll have to see what that does for them. With that, everybody have a great weekend. I'll be back. Adam's currently out of town, but I will be back on Monday, and we'll kind of see how the week's starting out, any big news hitting, and we'll go from there. With that, everybody have a great trading day, and we'll see you on Monday.